Hey, I'm Jusko from ProudMoney.com. In this video, we are going to talk about how to increase your credit score quickly in the short term, and then we're also going to backtrack after we look at some short-term strategies to goose that credit score and look at some foundational things in order to build that credit score over time so that you no longer will be looking for short-term strategies. The number one strategy for increasing your credit score may seem obvious, but it should be said, and that is to pay down your credit card debt. The amount of debt that you have on your credit cards and other revolving credit accounts, especially as it relates to the limits on those accounts, is a huge factor in how your credit score is calculated. And the good news is that even if you had high debt on your credit cards in the past, once you pay them down to a lower level, that will help your credit score and you won't be penalized for having had larger debt in the past. So the amount of debt that you have on your credit cards versus your credit limits is something called the credit utilization ratio. What percentage of the limits that are available to you are you actually using? For example, if you had 3 credit cards and between those 3 credit cards you had $10,000 worth of credit available to you, $10,000 in credit limits, and you had $6,000 of credit card debt spread between the 3 of them, well then you have a 60% credit utilization ratio. You're using 60% of what is available to you, and that is very high. Ideally, you would like your credit utilization ratio to be under 10%, but even if you can get it to under 30%, that could help your credit score quite a bit. So if you have the capacity at all to pay down that credit card debt, it can make a big difference in a short time. And I want to make a point again of saying that if you can get that credit card debt down and keep that credit utilization low, that can help your credit score quickly, because when it comes to calculating your credit score, the utilization ratio is a snapshot in time. So even if it was higher a couple months ago, when your credit score is recalculated, it is going to use whatever the most recent credit utilization ratio was. So it doesn't matter what it used to be, it matters what it is now. So paying things down can really goose your credit score in a short time. The second strategy, if you want to boost your credit score quickly, is to see if you can become an authorized user on somebody else's credit card, assuming that that credit card has a good credit history. So this might be a parent, it might be a spouse, it might be a sibling, it might be a friend. What happens as an authorized user is that person adds you to one of their existing credit cards and essentially is giving you the ability to use their credit card. Now, they don't have to actually physically give you the card or give you the credit card number to add you as an authorized user, so it's not necessarily something that has the potential to hurt them. But what it does for you is it adds the history of that credit card onto your credit report, at least in most cases. Every card issuer handles things slightly differently, but in most cases you are going to get the history of that card, including how long the card's been open, the payment history of that card, showing the on-time payments that have been made, the credit utilization on that card. If it's low, that is going to help you. So all of a sudden, all this stuff is on your credit report as if you have had this card for a long time, and it doesn't hurt the other person for you to be an authorized user. So if you can become an authorized user, that is going to put new, good information on your credit report and increase your credit score in a short time. Now, I should add that when it comes to authorized users, there is sort of an underground market out there where people will sell their trade lines, meaning that people you don't know will offer to put you onto their credit card as an authorized user for a fee. The credit card issuers definitely frown upon this, and what could happen to you is if you pay to get on somebody else's credit card as an authorized user, but you don't know them, you might give your money, and maybe it'll help your credit score in the short term. But what could happen is their credit card could be shut down if the credit card companies see that authorized users are showing up on their card that don't seem to have any relationship to them, and so then you could be out your money and your credit score could go right back down again. So if you're thinking about doing this sort of trade line renting in order to increase your credit score, know that there is a danger. And then one other piece of advice that you might see out there if you're trying to increase your credit score quickly is that you should look at your credit reports and see if there's any information on them that is wrong that you can dispute with the credit reporting agencies, TransUnion, Equifax, or Experian. So you can look at your credit reports for free from any of these credit reporting agencies and see if there's anything wrong on there, something that is maybe not your information or is wrong information, especially if you have a sort of more or common name, it is possible that somebody else's information could end up on your credit report and hurt your credit score. Now, this doesn't happen all that often. If you go out on the internet and read some things, they'll make it sound like this is happening all the time, but it can happen and it is worth taking a look at. However, some people will tell you what you should do is dispute everything on your credit report that makes you look bad. So anything that you have actually legitimately done that has hurt your credit score, you should dispute it and somehow say it is not your charge or that it shouldn't be on there. And in general, this is not going to help you. You're just going to end up paying somebody else or doing a lot of work to try to get things off your credit report that are legitimate items. If you have something in collections where you have a collections agency coming after you, sometimes they will make a bargain with you where they will say, we will take this off of your credit report, this new bad information that we have put on, if you pay us. And technically, that is not something that they legally should be doing, but they will do it and they will tell the credit reporting agencies that they made a mistake and that that should not have been on the credit report to begin with. So that's sort of a bargaining chip they will use with you. But in general, if you are trying to dispute things on your credit report that are legitimate, it's probably not going to work out for you, even though there are a ton of people online that will tell you you should. So try to pay down your credit card debt, try to become an authorized user on someone's credit card that has a good history, check your credit report for errors, but try not to fall prey to schemes that tell you that they will increase your credit score if you pay a fee, or just schemes that are out there that are going to waste a lot of your time. All right, so those are some strategies and tactics to increase your credit score quickly. Now we're going to take a step back and look a little bit more at the fundamentals of increasing your credit score over time so that it increases and stays solid, so you won't have to worry about trying to increase it over the short term. So FICO, the Fair Isaac company, which is the originator of credit scores, the FICO scores that you hear so much about, they have a sort of pie chart that shows you the 5 factors and what the percentage is that they have in terms of weight in your credit score. So FICO says that 35% of your credit score is made up of your payment history. 30% is amounts owed. 15% is the length of your credit history. 10% is new credit, meaning new credit accounts, and another 10% is credit mix. So let's look briefly at each of those factors. 35% of your credit score is your payment history. That means, do you pay your credit card bills on time? Do you pay your auto loan on time? Do you pay your mortgage on time if you have one? Every time you make an on-time payment, you help your credit history, you increase your credit score. When you make a payment late or you don't make a payment at all, that's when you hurt your credit score. Now, some people freak out about late payments. They think if they're a couple days late that they are going to tank their credit score, and that is not the case. You might get a late charge from your credit card company or other lender if you are a few days late, but you only hurt your credit score if you are over 30 days late or over 60 days late, or worse, 90 days late on those payments. So your credit card company or anyone else is not going to report your late payments to the credit reporting bureaus unless they are very late, over 30 days. So that's when you really hurt yourself. And once you get one of those really late payments over 30 days on your credit report, it's going to sit there for 7 years. And so it's going to hurt your credit score for a good long time. Now, having an over 30 days late that was 6 years ago, it's not going to hurt you as much as having an over 30 days that was 2 months ago. But still, it is going to sit on your credit report and it's going to hurt you for a while. So as long as you make your payments on time, you can really impact your credit score positively. And as long as you don't totally screw up, you won't hurt yourself. All right, 30% of your credit score is amounts owed, and that is largely that credit utilization piece that we talked about earlier. How much debt do you have on your credit cards or other revolving accounts versus the credit limits on those accounts? What is that percentage? The lower you keep it, the better off you are. Now, auto loans and mortgages somewhat come into play here because obviously those are amounts owed as well. But FICO says that they sort of treat them as different, and the credit utilization on your credit cards is the much bigger piece here, because obviously with an auto loan, you might have a big loan, but if you're making your payments on time every month on an installment loan, they don't want to punish you for the fact that you have a larger loan on a car or on a mortgage on a home, which obviously is going to be very big. So when it comes to amounts owed, it is really that revolving debt that you want to make sure you keep low and don't worry about the fact that you are paying on a car or paying on a house. All right, so payment history and amounts owed, take those together. They're 65% of your credit score. Get those right. You're probably going to have a pretty good credit score and a solid foundation going forward. Now, the third factor, according to FICO, in your credit score at 15% is length of credit history, which might seem like something you can't control, but it's a little more complicated than that. So the length of your credit history actually has three factors. First off is, what is the age of your oldest account, which again is something you can't really control. Whenever you got that first account is when you got it. However, there also is the average age of your accounts. So if you have multiple accounts, what is the average amount of time that they have been opened? And if so, that means if you have a lot of newer accounts, that is going to bring that average down, and that's going to be worse than if most of your accounts are older. And then the third factor, which kind of is plays along these same lines, is how old is the newest account on your credit report. So ideally, you want to have more older accounts when it comes to length of credit history versus maybe one older account and a bunch of newer accounts. So think of all of that as well. All right, next up at 10% of your score is new accounts, which sort of correlates with length of credit history, but it is specifically about new accounts you've either opened or tried to open in the last 12 months. So applying for a credit card, whether you were approved or disapproved, usually is going to be a hard inquiry on your credit report and is going to ding your score a little bit. Same thing for auto loans, same thing for mortgages. The good news is these inquiries only are part of your credit score for the next 12 months, and then they drop out of the calculation. So even though they might ding you in the short term, as long as you use those accounts wisely over time, make your payments on time, all that kind of stuff, that will help your credit score. But you're going to get a little ding for going after new credit. Now, I will mention here that for auto loans and mortgage loans, usually the way it works is because they want you to shop around, you'll have one inquiry, even if you have multiple auto loans that you may have applied for or multiple mortgages that you might have applied for, where they are doing inquiries on your report. But anyway, this is only 10% of your score, so you don't have to worry too much about it unless you don't have much of a credit history. Then you want to be kind of careful. You don't want to be going after, 5, 6, 7 credit cards all in a year when you don't have any credit history, because you might be getting declined for all of them and taking the hard hits on your credit report. For most people, not that big of a deal. And then the final 10% of your credit score, according to FICO, is credit mix, which essentially means, have you been able to handle different types of credit successfully? Have you been able to handle credit cards, and have you been able to handle things like auto loans, mortgages, those installment loans? It's a little bit of a different discipline in order to handle credit cards well and handle installment loans well. And so if you've done both, well, then that will help your credit score. If you've only done one or the other, that is going to not hurt your credit score, but it's not going to give you maybe some extra points if you're really trying to maximize things. I would never suggest you go out and get an installment loan in order to try to increase your credit score, but if in the course of your life you have gotten both credit cards and installment loans as part of what you normally would buy, well, then that can help you. So that is mostly it. I do want to mention Experian Boost here also. This is a way for you to increase your credit score with the Experian Credit Reporting Agency only. And what you can do is you can have other things factored into your credit score with Experian, like utilities, your cell phone bill, your Netflix or Hulu, or those sorts of things. So you can get those onto your credit report also with Experian only. So there are 3 major credit reporting agencies: Experian, Equifax, and TransUnion, and each of them is going to have a little bit different credit report and credit score for you based on the information they have. So Experian is giving you the opportunity to increase your credit score with them by factoring in payments on other things as well. This can be good for you if you go after a credit card that is going to hit your Experian credit report in particular, and you're going to look like you have a higher credit score because of those extra payments. That is great. If they're hitting one of the other agencies, the Experian boost isn't going to make any difference. So that is pretty much it. There are some other services out there that will allow you to get things like rent payments onto your credit report, which normally are not part of it, and other things as well. But I think these are the major steps you're going to want to take if you want to increase your credit score in the short term as well as in the long term. Questions, comments? Put them in that comment section below. Otherwise, I thank you for watching. And as always, please go to proudmoney.com where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you don't have a comment or you don't want to go to the website, you might want to watch next this video.